All right, team. Good evening, everybody. Welcome aboard to our stock market weekly recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Happy to be with you this Sunday evening. We're about 30 minutes away from futures open, so let's go ahead and get started. Just want to start off from the top. We do have a supplemental article that's going to be released on GAR Capital's website, www.gar.capital/articles. We have our options weekly recap if you want the details of how we did. Also on futures, as you can see, 6 for 6 on futures, 7-0 with options. We're continuing our streak. It's been absolutely amazing. I don't know where we are currently in terms of 18. Yeah, 18 in a row. That's where we are in options. So if you've been following this channel for a while, we've had some really great streaks. We've had some really tough weeks. It's ups and downs. That's how the tides go in terms of the market. 1 week you're doing great. 1 week not so great. 1 month you're doing great. 1 month you're not doing so great. The idea over time is consistency. Try not to focus on what you've done, in the past. Focus on today. What can we do today? And it starts here with recapping the session, recapping the week, and previewing the next week. So here we are, 30 minutes ahead of futures. Let's take a look at the S&P 500. Again, if you are interested in our articles, we got tons of great stuff here. It's our website, www.gar.capital. And if you are interested in any of our services, here they are under pricing, options, alerts, futures alerts, lifetime legacy membership, and we also have masterclass with me. Unfortunately, soon, very, very soon, I'd have to do a waiting list for one-on-one teaching. It's just getting a little too busy for me personally. So again, if you are someone that is interested in masterclass, make sure to email us, garcapital@gmail.com. We also have a contact button on our website. Make sure to get all the details that you need to get started. Back to it. S&P 500, take a look at here on the futures side. We are above the 200-day. Yes. Above the 100-day. Yes. Are we still in a death cross? Yes, unfortunately, but that's not going to change overnight. But we did not get to 6,000. 6,000 is going to be a very key level. We just got news on Friday of a downgrade of US debt. Oh no, the world's going to end, right? Remember Moody's? That's what happened. They downgraded US debt to the second notch above AAA, which is AAA2. So let's go turn the clock back to August 23rd. August 23rd, right there, August 2nd. This is my thoughts. I wrote this on my personal Instagram, CEO GAR Capital, and on GAR Capital's Instagram. I think that it's best I do the explanation on the market when it's red. Since it's few and far between nowadays, sound familiar? So let's make it a tradition. If we are ugly red, let's break it down. What happened yesterday? Or what happened? Yes, we know Fitch. This is Fitch. Now it's Moody's. Downgraded US debt to AA+, second notch. To give some context, it's like giving your FICO score an 850 to 820, which is pretty much kind of the best analogy we can use. What does that mean for the market? Stocks fell in the headline, and S&P broke the streak of down 1% days since May. Could we be due? Probably. Remember, seasonality shows we get chopped for the next couple weeks. Just interesting timing as well. Remember that. Crude fell today, gold fell today, not exactly showing risk off, and yields back then were 4.0%. We are now at 4.44. That's what happened today. Here's my thoughts. This is from 2023. Rug pulls and headlines happen. Nothing new. Remember the debt ceiling fight and that volatility? Yep, we passed that too. You're not going to go up every single day. That's not how bull markets work. That's how manias work. And that's not what we want. We want sustainable push higher with testing and bouncing off support. Look at Apple on the 4-hour chart, very clean and down to the upside. Like I said 3 weeks ago in early July, where we had a rug pull on Thursday, sometimes it just rains. In no economy in history has there been a recession with GDP expectations of 3.8%. This is 2023, Atlanta Fed projection. Even Bank of America took back its recession expectation for Q4, similar to the Federal Reserve. One session does not a market make. It wasn't a sector-specific pullback. It was everything, which is normal in bull markets, with profit taking on headlines. Get used to it. Mind you, this is 2023 we're talking about. Let's go back in time and see what happened after that. Fair enough? We'll go to the weekly. This is August of 2023. Oh no, we tested the 200-week moving average. Bounced right off it. We just got the headline after we got bounced right after the fact near it. So if Moody's would have said what they just said in April, this would have been a different conversation. But since we have bounced back so much, this is a good opportunity for those who are looking for excuses to sell. You don't need a reason to sell, but you need a reason to buy. Remember that. Very, very important. We're above the 786 fib. Let's use that as our support moving forward. But from now on, 6,000 S&P. How convenient that we get this downgrade. Then could have got the downgrade here. Could have got the downgrade here. How about here? Here. Start to notice the pattern. So knowing that, like the poker players that we are, what do we do about it? It's all about scenarios. We don't deal in absolutes because we don't know. At the end of the day, we're still using educated guesses based on patterns. So, not the best inverse hammer on the daily. Is that the worst thing in the world? No, but I can show a couple times where we've had that same scenario and it was a red day the next day, March 27th and April 17th, one red day. Yep, those inverse. But we also had one here on May 1st, but that was a red candle, and then we boosted next day. So those inverse hammer candles, again, they're not perfect indicators of the future either, but I am expecting at least somewhat of a pullback in futures when we open. That's okay. We've been just a straight trajectory higher. Let's go to the S&P 500 index, the spot index. Got a gap to fill at 56.94. We got a gap to fill at 53.20. Yeah, we may go filling some gaps. We got some down here at 44.31, 43.22, and 42.44. I don't think we get there. Earnings have shown us, GDP has shown us, jobs have shown us, inflation is tame. Well, what more do you want? This market has taken on everything head on, everything you could throw on it, every reason to be bearish, and here we are. Now it's time for some profit taking. That's kind of seems like the excuse out there. So you see this yellow line here, 5,800 S&P 500. More than likely, we're going to retest that. And probably, if things start accelerating on a very quiet tape in terms of economic data, we don't have much. Let's take a look at that right quick. We'll go to the pre-market plan, not that one, sorry, earnings calendar. And you could see claims on Thursday, PMIs on Thursday, existing home sales on Thursday, and new home sales on Friday, and a bunch of Fed speakers. That's it. Look at earnings. Home Depot, maybe. We can keep an eye on that. We'll look at that here in a second. Target, maybe. But other than that, maybe Zoom. We'll look at those three and Snowflake. You also have Palo Alto, but the options market is pretty quiet there. We'll take a look at those here in a bit. But for now, the idea is I'm expecting us to pull back, just profit taking, not the worst thing in the world. The idea is that lately it's all been retail driven. The institutions are not buying. Do the institutions use this dip as this opportunity to buy in? That remains to be seen. But I fully expect that we will retest some levels, 1500 SPX, and if we go on ES, that would be right around 59, let's say 58.85 or maybe 58.50 or so, right around here, 58.57. We do have another gap to fill down here. We could always fill that at 5,700. So again, if we do pull back this week, this early this week, it's actually nothing new. Very, very common because you can see this is the stock market almanac. Bearish day on Monday, bearish day on Tuesday. I'm not saying that's going to guarantee to happen, but it wouldn't be surprising. That's all. I think what we're getting in the market is the beginning of pessimism that happened in April, looking for reasons to sell, looking for reasons that things are bad, whether it's jobs, inflation, GDP, whatever. Look at the consumer expectations, right? We've seen those University of Michigan stuff, right? How's this? Democrats expect 9.6% inflation in a year. Republicans were doing the same thing back in 2022. What are we talking about? It's all bias. This is a market predicated on what? Perception. The stock market is all about perception. The future growth of American companies. That's the S&P. So right now, what I see is that we had a market in April that was searching for bad news since Liberation Day. And then after that, the market was hoping or clinging on to good news at the bottom. And then we got that move higher. Now the market, to my opinion, seems that it's looking for any reason to take some profits. And now you got one, which is your precious debt downgrade, whatever. Is it a big deal? We had it in 2023. No big deal then. Let's take a look at the weekly when that was. Oh no, it was right at when we were at 38.41 S&P. Oh God, if you had a coma for the next 2 years, you're up. Give me a break. This is just excuses to take profit. And I'm going to take advantage by shorting futures if it comes, if it does. So let's start with 59.20 as our support. If we break below that, we'll take a look at some gap filling if we get an opportunity. But my first level that I'll be looking for is right around here, 58.80. Right there. If we can get to TP2 right around there, if we break down, more than likely we may slice that down, maybe test 58.80 right at the open. It's imperative. Don't rush the first second when New Zealand opens trading. I've noticed that on Sundays, right at the open at 6 to around 8, it's best to just wait. If not, do not trade on Sunday. At least lately, it hasn't been working out for me, futures traders. So S&P, if we pull back, that's what I'm looking for. Gold futures. Gold futures, again, this is still a downward trend. Nothing has changed, to be quite honest. We do have a gap to fill here at 33.27. I don't expect that kind of fear on gold to get us above 32.60 quite yet. That seems to be the place of resistance. I still like gold downside. I think early in the week, um, we'll get a little bit of weakness on the S&P, and then it's really up to the institutions to see if, well, are they going to take advantage of this weakness and go from there. But if you look at Apple, you can see that inverse head and shoulders on the 1 hour. I talked about that on the article. That's still a great setup for the future, at least for this week. Nvidia is still in an upward trend. So again, the individual names, in my opinion, are giving more of an advantage or a more edge than, let's just say, the indices themselves, which have been a little bit choppy, at least on the S&P. But gold has been great for us, and we did great this week. So cheers to that. Again, just wanted to kind of go over what else we're looking for the week, and we'll wrap it up. Earnings calendar, let's kind of look at some names here. Home Depot, Palo Alto, Snowflake, and Zoom. How's that? All right, let's go ahead and take a look. Home Depot, what do we got? We're about 20 minutes away from the open, so I want to kind of get this process as soon as possible. No real edge here, to be quite honest. It could be setting up a head and shoulders. I think Home Depot is rather neutral than anything else, so we'll skip that. Let's take a look at Palo Alto. Hey, this looks a little better. You can see just at least an upward trend on the daily. Let's draw a couple lines. Not exactly perfect, but you can see that we broke below. Yeah, I mean, doesn't look amazing. I would prefer that we break 200. If we break 200, yeah, then I expect more upside, but Palo Alto doesn't actually have like the best options volume either. So I'll go neutral on that. I'll skip them. Target. Oh boy. Target on the weekly. Yep, at support. Everyone hates it. Is this the time for Target to bounce? Well, do we have tariff fears anymore? Well, we do have a gap to fill. So this one would probably be your best bet if you're looking for some kind of earnings lotto, um, because then you're trying to look for a breakout and fill that gap. So keep an eye on the 120 strike calls for anything that's a little more longer dated. I wouldn't do same week unless you really want to push the envelope there, but you could see possible wedge here, reversal, downward trend. You got your kind of flag, let's just say, hey, we break above 102, 102.73. Maybe we got some cooking. I'll lean bullish here on target. I think that's a better setup than the other ones. Let's go to Snowflake. Snowflake above 194.34. We are looking for a gap fill at 211. That looks great. I think Snow is bullish. There you go. Home Depot, Palo Alto, meh. But Snowflake and Target opportunities indeed. Zoom on the weekly. What do we got? Yeah, we got to get above 90. If we can get above 90, we'll take a look at some possible calls on this stock. But you could see eventually Zoom will get us somewhere, right? One of the darlings of the COVID era. But we could see, hey, got a little breakout here. Break above 90, we can go look for calls. Other than that, that is your week. Not much on economic data, not much in terms of earnings. We have gone through the gauntlet, it seems, and yet here we are. Only a stone's throw away from all-time highs, guys. Look how close we are, 6166, but yet we reject 6,000. Round number theory, am I right? That's when the news comes out. Give me a break. People are looking for an excuse to take profits. Do not be surprised. Take advantage. Let's take a look and see if we can get some short action this week. And if we don't, buy the dip. Rock and roll. Have a great rest of your evening. I will see you for Futures Open. Have a great week. Thank you so much for being supportive of GAR Capital. I am truly honored and humbled that you're here. listening to anything I have to say. Have a great rest of your weekend. I'll see you bright and early tomorrow. Cheers all.